Crypto.com just secured a staggering $400 million investment from Citadel Securities, elevating its valuation to an astounding $20 billion. This move signifies a monumental shift in institutional adoption within the cryptocurrency industry. Here's what you need to know. Looking ahead, Crypto.com is poised to expand its institutional services, including custody, trading, and tokenization solutions, specifically targeting banks and asset managers. This strategic move comes in the wake of growing interest from institutional investors who have increasingly recognized the potential of cryptocurrencies as a legitimate asset class. The surge in institutional participation follows a period of volatility that has tested the resilience of the crypto market. Traditional financial institutions are now acknowledging cryptocurrencies not merely as speculative assets, but as viable components of diversified portfolios. The ripple effect of this investment could lead other exchanges to seek similar backing from traditional financial institutions, accelerating a trend towards Wall Street-grade crypto platforms that cater to the needs of large-scale investors. As institutional inflows increase, market sentiment may turn more bullish, especially for Bitcoin and major altcoins. History shows that such investments often precede significant price rallies, reflecting a maturation of the crypto market. Furthermore, the easing of regulatory pressure may occur as successful collaborations between crypto firms and traditional finance demonstrate the stability and viability of the sector to policymakers. This evolving landscape could encourage regulatory bodies to establish clearer frameworks, fostering a more secure investment environment. Observers should watch for developments in the next few weeks, including announcements from Crypto.com regarding new services and other exchanges potentially announcing similar partnerships. As these dynamics unfold, a pivotal question emerges. Will this investment mark a turning point for cryptocurrencies as they transition from a speculative niche to a core component of the global financial system? The upcoming months will be crucial in determining whether this shift materializes, as institutional confidence could reshape the entire crypto ecosystem, ultimately paving the way for broader acceptance and integration into mainstream finance. The investment from Citadel Securities marks a significant moment in the evolving relationship between traditional finance and cryptocurrencies. Over recent years, institutional interest in cryptocurrencies has escalated, driven by a series of pivotal events that have shaped this dynamic landscape. The launch of BlackRock's Bitcoin ETF, which has rapidly amassed an extraordinary $70 billion in assets, stands as a clear testament to this trend. This ETF has not only become the largest revenue source for BlackRock, but also serves as a bellwether for institutional adoption, reflecting a growing acceptance of digital assets among major players. Meanwhile, Goldman Sachs has begun offering Bitcoin non-deliverable forwards, allowing Wall Street investors to engage with cryptocurrencies more comfortably. This move further solidifies the integration of crypto into mainstream finance, expanding the tools available for institutional investors. Regulatory clarity has played a crucial role in this transformation. The U.S. Treasury's advocacy for federal digital asset guidelines has provided a necessary framework that encourages institutional participation. Furthermore, Singapore's decision to expand Ripple's permissions for token-based settlements demonstrates a global shift toward accommodating digital assets, signaling that nations are beginning to recognize the potential of blockchain technology. These developments contribute to a more mature ecosystem, making exchanges like Crypto.com increasingly appealing as partners for institutional investors. Unlike previous cycles characterized by speculative enthusiasm, the current atmosphere is defined by strategic investments and calculated risk-taking from major financial institutions. Looking ahead, as more institutions embrace cryptocurrencies and regulatory frameworks continue to evolve, we can expect a deeper integration of digital assets into traditional financial systems. This could lead to innovative financial products and services that leverage blockchain technology, ultimately reshaping the investment landscape. The potential for cryptocurrencies to become a cornerstone of diversified investment portfolios is now more tangible than ever. The recent $400 million investment from Citadel Securities marks a transformative moment for Crypto.com and the wider cryptocurrency market. This significant deal underscores a growing trend where traditional financial institutions are increasingly recognizing the potential of cryptocurrency exchanges. Major players on Wall Street are beginning to express confidence in the operational integrity and regulatory frameworks surrounding crypto infrastructure. The implications of this investment extend beyond just crypto.com. It signals a shift in how cryptocurrencies are perceived by the broader financial community. Historically, cryptocurrencies have been viewed with skepticism by traditional financiers, often seen as speculative and risky. However, as regulatory clarity improves and institutional adoption rises, the narrative is changing. Citadel Securities, a leading global market maker, is known for its rigorous compliance standards and operational expertise. Their commitment to investing in crypto.com illustrates a belief that the cryptocurrency ecosystem is maturing and can offer robust opportunities for capital growth. For crypto investors, this influx of institutional capital is poised to have immediate and far-reaching consequences. Greater liquidity and deeper markets are expected to emerge, enhancing trading conditions and potentially reducing volatility. Retail investors may find themselves in a more secure environment, as exchanges backed by established financial firms typically exhibit lower counterparty risk. Additionally, this partnership is likely to pave the way for a wider array of product offerings. Innovations such as tokenized assets, derivatives, and specialized custody services for institutional clients could soon become commonplace, further solidifying cryptocurrencies as a viable asset class. The average individual should take note of this trend, as it could lead to a more stable market environment. Increased institutional interest often correlates with price rallies, particularly for major cryptocurrencies like Bitcoin and Ethereum. As traditional finance continues to embrace digital assets, we may witness a surge in asset values across the board. Looking ahead, the collaboration between traditional finance and cryptocurrency platforms is likely to reshape the investment landscape. With more institutional players entering the market, we can expect the emergence of new financial products and services that will not only enhance liquidity, but also attract a broader demographic of investors. This evolution could redefine how we perceive and engage with digital currencies in the years to come. On July 18, 2026, Crypto.com, one of the largest centralized cryptocurrency exchanges globally, announced a groundbreaking investment from Citadel Securities. This top-tier market-making firm, a subsidiary of the influential hedge fund Citadel, has invested $400 million in Crypto.com. This significant influx of capital raises Crypto.com's post-money valuation to $20 billion, solidifying its status as a leading player in the crypto exchange market. The investment aims to expand Crypto.com's capabilities to serve institutional clients, enhancing its infrastructure and offerings. The announcement was made during a press conference at the exchange's headquarters in Singapore, where executives highlighted the strategic importance of partnering with Citadel. This investment comes at a time when the cryptocurrency market is experiencing a resurgence following a period of volatility and regulatory scrutiny. In recent years, cryptocurrencies have gained traction among retail investors, but institutional interest has been more cautious. Historically, institutional players have been hesitant to engage with cryptocurrencies, often viewing them as speculative and risky. However, Citadel's substantial financial commitment marks a significant departure from this mindset, reflecting a broader trend of acceptance within traditional finance. The ramifications of this investment are profound. With Citadel's backing, Crypto.com is poised to enhance its technological infrastructure, improve liquidity, and expand its suite of services tailored to institutional investors. This could potentially lead to increased trading volumes and a more robust user base, with further establishing Crypto.com as a leader in the competitive crypto exchange landscape. Additionally, the partnership may attract other institutional investors, creating a snowball effect that could shape the future of cryptocurrency trading. Looking ahead, the collaboration between Crypto.com and Citadel could signal a new era for the cryptocurrency industry, wherein traditional financial institutions play a more prominent role. As regulatory frameworks continue to evolve and stabilize, we may witness an influx of institutional capital into the crypto space. This shift could drive innovation and foster a more mainstream acceptance of digital currencies. The partnership's impact will likely extend beyond crypto.com, influencing the entire crypto ecosystem and paving the way for future collaborations between traditional finance and digital assets. Ultimately, this strategic alliance could redefine the landscape of cryptocurrency trading for years to come. As we consider the implications of this monumental investment, what are your predictions for the future of cryptocurrency? Will we see more institutional involvement? Let us know in the comments and subscribe for daily deep dives into the latest news.